Okay, we would like to go to Emeka now, since Emeka is a ship owner and ship manager. So you talk to us from an industry, private sector perspective. We would like to ask you, given your experience as a ship owner and manager, can you please highlight some of the challenges you faced in ship financing?
Thank you very much. I would like to add another appellation to your description. Jokingly, I referred to it when we started. When you see a ship owner, just refer to him as a highly indebted person, because the amount of leverage that we carry, when you see us, what you should see is actually, you should look at us with pity, because of the leverage that is on our shoulders. So when you see my gray hair, some of it is actually because of the burdens of owing money. But I'd like to thank Peter and DG. They've actually highlighted a lot of the issues that I was going to raise, because some of them, have been very aptly, so I must thank them for, even if they are not wearing the shoe, I must thank them for crying with us. So I'll just basically give a background. First thing that I think is the biggest problem is the banks do not have an adequate knowledge about evaluating risks in shipping. So you find that the typical Nigerian bank will try to align the length of the contract that is on hand with the length of the loan that they are given. And that doesn't work. Jeremy would confirm, typically lenders in shipping look at the market and have an understanding and are willing to take some level of residual risk after the primary contract. Because you're looking at assets which have a typical life of 15 to 20 years. And in some cases, I've been offered loans for 2 years because I have a 2-year contract. Then when I argue a lot, they say, okay, there's an option for 1 year. So the loan period goes up to 3 years. And you are struggling in a short period of time to repay. So by the time you pay the OPEX and you pay the bank, you have nothing left. In some cases, you actually have a negative cash flow. So the big thing is actually, a big constraint is actually having banks understand that these are assets, because you're not going to finance a house and expect repayment in 2 years. That's why ships have mortgages. The same way, they have the same kind of long-term asset values. Yes, the pattern of the residual value risk is different, but at the same time, they have long-term value. So until banks start to recognize that there's a residual value in their banking transaction, they're going to structure it wrong. I had spent a long time trying to convince one of my banks, and eventually he agreed. And he was trying to compress us into a 4.5-year period because we had a 5-year contract. Meanwhile, I had a 5-year contract plus a 2-year contract. And as I talked to you, the vessel is still working with the same client 8 years after. There's life after the primary contract period. That's the idea we have. So the biggest problem is actually that tenure from the banks. The second problem is related, but it's a macroeconomic thing. The interest rates that are charged on a long-term transaction are simply impossible to live with. We had a financing that was in Naira and it was at 21%. And in the first 6 months of the contract, all we were able to achieve was to pay the interest. Actually, the first 8 months. So it screwed it just messed up our financing plan, because we had planned to finance in foreign currency, and then we were forced to take a Naira facility because that was all that was available at the point in time. So as quickly as we could, we had to switch into foreign currency financing. So, which is where I think that, given the ideas that the DG is fashioning for the CVFF and with the new committee, I think that if we can get something right, we should actually be able to impact this. And DG touched on the high import duty. high import costs, which is why the foreign operators have a big advantage. They come in, they put a TI down, and they bring a vessel. And for a country that does not have any viable shipbuilding capacity, it costs you so much to import a vessel to put on the flag. So it's actually a disincentive. In a number of other countries, they have concessions about spare parts destined for vessels operating in the country. So that's a big issue. We also have ongoing issues, which I think are improving because the MASA has actually spent a lot of time and effort in trying to improve the classification, flag states and classification society framework. So that has improved. There's still a bit of work to be done, but I think the MASA is moving in the right direction in that respect. There are also industry challenges. I mean, I must tell you that one of the big problems is because a lot of our ship owners are also sole entrepreneurs, more or less, and the loan-to-value ratios that the banks typically ask for mean that you have to put in quite maybe about 25 to 35 or 40% of the value of the vessel into the transaction. It's a bit of, it's difficult growing your capacity in that respect. So I think that with CVFF coming and that dropping to about 15%, that should help quite a lot in terms of, so I think those are the problems, because I noticed we're running late, so I'm going to keep it as short as possible. But I think those are the key problems that we have. The last problem, which I think has to do with the lawyers, is actually the abuse of the maritime arrest. It's a major disincentive to operators. I think it's the DG that pointed it out, Peter that pointed out. The ease with which people get arrest warrants without penalties is very worrisome. Because every day that your vessel stays idle is an economic cost. We recently had a situation where, for a completely spurious case, where the person did not, and the motion was granted ex parte, so we didn't even have the opportunity to present a defense. We suddenly woke up one day and found that bailiff was chasing one of our vessels to arrest it on a case on which there was completely no merit, and which even the facts of the case went completely against the Admiralty Act. And yet a court in Nigeria gave an ex parte motion to arrest the vessel. Those things become big challenges, because once you leave that contract, the oil companies who we work for are interested in getting their work done. So wherever they can get a vessel, they will use it. So I think it's important that if we want capital to flow into shipping, we must have the right policy frameworks, the right infrastructure to attract capital. And capital is an international game. So it's like a balloon. It goes to where it gets the highest rewards based on risks and rewards. So it's like a balloon. You press it in one side, it goes to the other side. So there's really nothing special. So for an international financier, they will put money in a vessel that works anywhere that makes sense to them. So if we as Nigeria want international capital to come into Nigeria, we must look at what are the rules that will make us better. One of the things that we've had, because we're a listed company, so we probably able to borrow money internationally and so on and so forth. And we've had issues which we are working with infrastructure, with the flag stage, and so on to resolve. And I think they are ongoing. But it's important that we put everything in perspective. And the big problem is actually the legal system, because it really is a major disincentive for people. If you invest in an asset, somebody can take the asset and disappear with it in effect. So I think those are the big challenges that I find that stop us from, I think during the Q&A and subsequently we can expand on this. Thank you very much. I think I've touched on most of the major issues.
Thank you very much, Mr. Ndu. You talked a lot about the challenges, and we would like to ask, in terms of initiatives and other models that we could explore in Nigeria, such as potentially crowdfunding, do you think those are things that will work within our jurisdiction?
Well, I think every vessel owner I mean, certainly, for instance, like I said, because we are a listed company, so some of the structures that are available to us may not be available to every ship owner, but I think we have to look at ways to improve that. For instance, last year we issued a $7 billion, roughly $20 million bond to finance our business, because we could put that together in and issue bonds to the PFAs. So we've over the years, because we have to find ways to turn $1 into 10. So we've had to be a bit innovative in terms of using, and we have a background in finance and leasing. So we've had to find ways to use structures like lease notes, secured on the vessel, and so on and so forth to finance the vessel. But I think that because of the immaturity of the legal system, we probably will not be able to get to, apologies to lawyers, but we find that if you go to court, it takes you forever to get a resolution, and that's fact. So if you get into crowdfunding, similar to what you find in Germany with the KG system, which is quite a popular way of financing a lot of vessels in Europe, you'll find that when the disputes arise, it's going to take 4 years or 5 years to resolve. So it simply will not work. That's why what I say about the immaturity of the legal process. We must have a process which dispute resolution is key if we're going to attract international capital, because nobody wants to get into a situation where there's a dispute and for the next 4 years somebody has an injunction that is rolled over, appeals to High Court and Appeal Court and Supreme Court, and those things are never resolved. So I think it's important for us to look at investing in judicial reform, because that really is important if we must make progress in capital mobilization, because it's an international game. And I think some of the things that the DG and the master are working on will actually work when we do it. Because like on the CVFF, one idea which I plan to table to the committee when eventually we start with everything is to use the CVFF as a leverage to try and expand into a guarantee facility rather than actually lending directly. If you put $200 million and you can then get maybe $1 billion in guarantees that vessel owners can use to finance vessels, you probably will go a longer way, because the CVFF as it is now is about 250 million max. And what I joke that one of our vessel owners, marine platforms, if they put one of their vessels down, the money is gone. So what do you do? So we have to find innovative ways to stretch the money that is available so you can actually get a bigger bang for the buck. I don't think that the guidelines as presently written will address that issue, because you will just get into a situation where you're doing one-on-one lending. So we have to be innovative about how do we use this as seed to in effect multiply, get a multiplier effect on that. If we can get typical values you get in guarantees is somewhere from and it's been done before. The mortgage bank industry has actually set up securitization where they put some money down, and that's been used as a basis for an expanded scheme to finance mortgages. So I think it's something that we have to look at. If we can turn the $200 million or whatever into a $2 billion fund for capital for acquisition of vessels, it would go a long way in expanding the local fleet. And I think that we also then need to look at access to work, because at the end of the day, if you look at a lot of the investments in marine assets in Nigeria have happened in the upstream industry. And that's because the IOCs provide, yes, the contracts could be longer, but they provide some tenure of contracts. In the downstream sector, it's almost like a pay-as-you-go basis. So it's difficult to get financing and have sustainable contracts that you can use. So a lot of people who have grown the businesses that have had to rely on a lot more on personal capital, because a lot of the banks are wary to finance assets where, you're going to use it to trade on a day-by-day basis, and you get paid based on how much cargo you carry and where you go. So we have to look at those issues, because I think that that's something that will stop us. Because I think that if we get it right, West Africa is a market that we can actually get into and dominate. because Nigeria has 70% of the GDP in West Africa. So if we say, yes, let's go into this, we should actually be in a position where we're carrying cargo from Nigeria to Cameroon, to Ghana, to Ivory Coast, to Senegal, because that's actually the market. And I think it's important for us to look at those things a bit more. And I know that NIMASA has looked at it, even the ship repairing infrastructure is being worked at. NIMASA has a floating dock, but a lot more needs to be done, because when you buy the vessels, you still need to maintain them. So those are areas where I think that we should invest in if we want the industry to grow.
Okay, thank you very much, Mr. Ndu. That was quite detailed.